Hey, this is Jack from Alpha Charts with a state of the market video. Today is March 18th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so we start with the SPX here. Oh, like and subscribe to my video, please. Thank you. Um, SPX here. We had this kind of VWAP pinch. It kind of fell below, right? Kind of like it did here. And this week, price kind of rebounded, right? It was quad witching. So that's why we see this higher volume piece here. So I'm not like overly worried about this volume bar per se. But over on the week, let's switch to a weekly real fast. We see the index was up 1.43%. So what I have really been watching is the deterioration of breadth under the surface. We keep flirting with this 200-day moving average right here, and the 50-day is still rising, even though that should start to flatten out in the next few days or so if it does, if price stays below it. And we have this potential little kind of toppy pattern that may be forming, but we don't know yet. It's very far away, but a very well-defined neckline. If it does, this 3,800-ish area to 3,780 area would be the neckline. A break below that would confirm this kind of head and shoulders-ish top. But the breadth under the surface, that's really my main point here. So on the weekly chart, we saw a 1.43% increase in the S&P 500. And most people would look at this and say, okay, that's pretty good. But when you look at the RSP, the equal weighted, it was down 1.74%. That divergence has got to catch our attention. Like, that is such a big divergence. And I'm going to go back to a daily now. One of the things that may be happening is that these big institutions, they have to put their money somewhere, right? So they are piling into mega caps, and that's a area of, we'll call it, of safety, and they may stay there, right? And we've seen the mega caps and these large cap stocks truly outperform, and we see on the charts, SPX versus RSP, and we could do a relative chart to the two as well, right? And we can see that SPX is wildly outperforming RSP and has been, basically for the entire month of March, 2 weeks now at least. And so maybe they just want to hang out in the larger mega cap names. That's very, very possible. Or the other possibility is that if they think the market's going to go lower and need to get out of the market altogether, and they're able to do that, because some aren't able to do that. But if they are able to do that, then a highly liquid name like an Apple, Amazon, Microsoft, Nvidia, Google, those types of names, those would be much easier for them to get out of the market versus a smaller mid-cap name. And we're going to go over the small mid-caps in a second and take a look at those. But that is a theory that either they're hiding out in the mega caps for safety, right? Because they have to be invested somewhere, or they know that the off ramp is much, much wider, right? As a 10-lane highway, as opposed to a mid cap or small cap, which is a 2-lane highway. So those are just some ideas that may be happening, right? We don't know for sure, but what we do know for sure is that there's a gigantic divergence between the cap weighted and the equal weighted. Looking at the Qs had a pretty phenomenal week, actually. Higher volume all along, broke out of this kind of pinchy VWAP area to the upside. So the next possibility could be the prior highs, which is pretty close to VWAP from the top. Doesn't mean it has to get there, but it may get close there. We don't know. And on the week, 5.83%, really strong week. Remember, this has no exposure to banks, no exposure to oil and gas to speak of. So it's all to basically almost all technology. A lot of the mega caps have even higher percentages in here than SPX, right? So looking at the Qs, we saw a 5.83%. The equal weighteds were up, but only a 2.61%. Okay. So again, we are seeing the same type of divergence between the two. So, and when we look at them relative to each other, right? And we want to go, we're still on the weekly chart. You see that really since January, we are seeing a divergence here of the cap weighted outperforming equal weighted, right? Before January, we were seeing the opposite. So this is at deterioration of breadth, right? On the S&P, on the SPX, especially when you look at them relative to each other. And again, this divergence, I think we have to, is getting steeper and steeper, and something that we have to be definitely aware of, that this usually doesn't end well. Now, again, we saw it all, for a long, long time, the entire way here. And then we saw the rebound, but now we're seeing a very sharp decrease. This definitely has my attention, if nothing else, right? This does not make me more bullish. This makes me less bullish in general. Let's go back to the daily and keep going. Looking at IWM, which is already a equal weighted chart. Again, a lot of these have that bear flag-ish look. It did hold where it had to. That's a positive. We are seeing the VWAP from the top, the peak, which is held now all the way, and it's still making lower highs, right? That's a lower high. And we talked about the lower highs in prior videos, that I never was able to retake this. And that was my one real when I saw that happening. Go back, look at the videos if you don't believe me, that this was an issue. And now, is this a bear flag, right? Or some sort of bear flag? Or maybe it's a falling wedge and we're going to get a pop higher. I don't know, obviously. Volume is starting to really increase, though. You see, starting last Friday, volume is increasing. And so, again, is this some sort of capitulation type move? Maybe, right? We retested these lows. We haven't made a lower low yet. Take out of these lows on a closing basis, and that'd be a problem. Then we'd most likely test these lows, right? Somewhere around 162. And then that would be, below that. And we're going, probably to this 127, 128 area, 125-ish. That's a pretty big move if this happens. So we're watching this area very, very carefully. That's IWM. IWO, I'm sure, looks exactly the same. It really does. Has not really retested this low yet. So it's holding up maybe a pinch better. But all these charts are basically living underneath the 200-day, except for the Qs. And that is always a negative. We're starting to see the 200-day, which was starting to rise, now starting to curl back over. Your 50-day starting to flatten out. Go back to IWM. I'm sure we're seeing the same thing. We absolutely are seeing the same thing. So now it's flat to declining again. That's our bearish scenario. 200 days already flat on the IWM. The mid caps, my favorite of the charts. We're starting to get that declining 200-day again, flat to declining 50-day. So everything looks like it wants to go lower. Retested this area. Yet if this breaks to the downside, I would expect this 400 level to be tested again. That's 10% or so, 8% lower. That would be my expectation. Nothing is bullish on the index level, in my opinion. That's it. That's the answer. We're seeing a divergence. We're seeing breadth deterioration. We're seeing things living under the 200-day, 200 days flattening, so curling lower. Nothing is bullish there. Let's look at the indexes. XLF, I expect it to look like crap. All right, so it's still holding $30, right? So that's the big spot. And let's go to the weekly here. I don't know what's going to happen with XLF, but I do know if it loses $30, that's gigantic. That's the 2007 highs. That's the 2018 highs, 2020 highs, and that's, false breakout there, could not make a higher high. And that's where support and resistance has been found the whole way. So we're right there into support, and $30 is the lower end. That's a big deal. This will be the chart I'll be posting later from my morning video because it is so important. XLF, watch $30. If we fall below 30, time to get into the bunkers and get your meals ready to eat and guns and ammo, right? Things will get bad. All right. XSD semiconductors, they've been holding up the best on a relative basis. You see they were up 2.42. So I love that. That is pretty good, right? Still above the rising 200-day, above a flattening 50-day. That's on the weekly, I'm sorry. But we are still above a rising 50-day, a rising 200-day. It has that little bit of a look that makes me a little nervous and could not make a higher high, just like the other ones relative to this. And so we'll see. Maybe it was a beautiful double bottom or bottoming pattern and it holds here. 188, 189, something like that. It's got to hold. Right now it is. So thumbs up for the XSD. But again, if you look at XXD versus SMH, right? Again, equal weighted versus cap weighted, we are seeing that divergence play out as well in semiconductor land. It just started, maybe a little bit later into March, not much. So we are seeing that happen as well. So just be aware that is not immune to the breadth deterioration. Transports, right? So what are transports doing? Transports screaming lower, living underneath the 200, that bear flag-ish look, but has not retested or broken lower. So definitely bearish underneath a flat to declining 200-day. And then housing, we're talking about the housing bubble. It's more resilient than some of the other indexes, except for semiconductors. Still above a rising 200-day. Even though it looks like it's flattening a little bit, which is kind of interesting. But starting to live under the 50-day and these other shorter terms, and has that bear flaggish look. Lots of volume coming in, not looking beautiful, but above a rising 200-day. So we have that going for us. All right. So on the ETF level, what are we saying? Really not many signs of bull market activity on the ETF level. Financials are on the precipice of a gigantic breakdown. They may not, but they're on the precipice. Semiconductors holding up well, even though we're seeing deterioration under the surface. Transports breaking down. Housing holding up decent, right? So index level, what is it telling us about the economy? Under the surface, I see more deterioration than base building and bullish activity. That's what that means to me, right? You can make your own determination, but that's how I see it. All right, so let's go into the internals and see what we see there. And of course, I turned the wrong thing off. Let's go here, here, here. Perfect. And with the internals, let's look at the VIX first off. And here's the VIX. And the VIX, not 6, VIX. Thank you. So VIX, we had the spike, and then we've had some lower highs and lower lows, which is fine. But to me, this looks more like a bull flag, right? If you really look at this. And I would guess dollars to donuts that if we start seeing breakdowns in some of the other things we talked about, we're going to get a spike in the VIX. So bull flaggish look to me on the VIX. And maybe it's my bias talking after seeing the other charts. I don't know. Credit spreads. Again, bull flag look on credit spreads. And you can see on the weekly chart, I've pointed this out before. We've had consolidation, uptrend, consolidation, move higher. Uptrend, consolidation, move higher. Uptrend, consolidation, now we're getting to move higher. So this would potentially be bottoming action over time, but you see it could take months. It doesn't have to be quick. All right. Let's go back to the internals. Anyway, so it looks like, for me at least, it looks like a bull flag on the credit spreads. Let's look at the FI percent stocks above the 50-day. Breath again is not very good. More bear flagish than anything else, maybe falling wedge, but in the end, things are moving lower, and there's more room to go on the lower side. We see a washout like this, that could be a sign, of bottoming action as a contrarian. Let's just look at the 200% stocks on the 200-day. There's obviously a lot of room also to the downside for the 200-day. We're looking for a move like this for capitulation, right? And if we get it, great. We may not get it, right? We may get more things like this. The 10-year yield, again, pile into safety. We see it at 3.4%. We'll see if this holds or if this kind of breaks down as well. And then the dollar, right? What's the dollar doing? The dollar, luckily we've had a decent backdrop for the dollar, right? If the dollar decides to break out during all of this, that would be a gigantic problem. All right. Bitcoin, right? With all the stuff happening in the world. Here's my dog. She's hanging out with us. Bitcoin. Give me 1 second to find the Coinbase one that I like. There we go. And you see Bitcoin has been just skyrocketing, right? So is that a perceived flight to safety, or is that something else, or is that bullish? We're going to find out pretty quickly, I think, as the divergence between Bitcoin and the banks, right? So let's just do that. Let's see if that'd be interesting. Versus XLF. So this is an interesting thing. So we have Bitcoin versus XLF. I've never looked at this chart before, and you can see that it has really very interesting, right? So you had this beautiful outperformance, then you have the underperformance, right? The topping, and you see the lower high right there, and you see that things did very poorly there. Now we're going to see the Bitcoin potentially outperform. We'll see if that continues or not. We'll see what happens when it gets up to here. But I don't know, just interesting chart. We'll see if there's anything we could glean from this one. But it is getting into an area of potential resistance, and we'll see what happens there. And let's just look at gold real fast because gold has been doing well recently. It's still in this general area, and on the weekly chart we have again maybe some sort of cup and handle. This handle's kind of big, whatever that you want to call this, maybe even double bottom. We know that this 185-ish area, 186 is a big deal. We're close to that. It's kind of screamed up, so we'll see what happens. So in the end, nothing is looking all that bullish right now. Not saying things are going to go straight down, but definitely I think the bears still have the ball. Deterioration of breadth under the surface is getting more and more significant and obvious. And we'll see what happens. All eyes on XLF. XLF is the chart to watch, I think. A breakdown 30, and things are getting real bad, and be careful with all your risk. Okay. If you haven't liked this video, please do that. Subscribe to my YouTube channel. Find me on Twitter at AlphaCharts365. Give me a follow over there. Retweet this video if you liked it. Share it with your friends, and I hope you all have a great day. Good luck this week. Bye.